The U.S. subprime crisis has brought huge change to the global economy and the world's financial markets. The bursting of the real estate bubble in the United States in 2007 led to the worst economic crisis since the Great Depression of the 1930s. Developed countries have seen their debt levels rise rapidly. As a result, many of them now face low interest rates and currency problems, factors that will remain major issues for investors in the next few years. According to Thomas Steinemann, chief strategist of the Vontobel Group, the focus is on the following themes.
One focus is the global shift of power from west to east. Given that emerging markets today generate 1/3 of all global economic output, but account for only 13% of the global equity market capitalization, there's enormous potential. The second aspect concerns increasing currency turmoil. The US is printing money at a rapid pace, and Europe is still suffering from the debt crisis. These two factors support investments in stable currencies, such as the Swiss franc, but currencies from emerging nations will gain importance as well. The third focus that investors have to consider is the record low bond yields in developed markets. I assume that interest rates in these countries will rise over the next few years, which will make such bonds less attractive. This is why we recommend adding emerging market bonds to portfolios.
After the dramatic changes at the beginning of 2011 in various Arab countries, many investors are now asking themselves whether investing in emerging markets is still safe.
Democratization is vital for sustainable long-term economic growth. Impressive examples can be found in both Latin America and Asia. Emerging countries have far less government debt than industrial nations and much lower inflation. This makes emerging market investments very attractive.
Emerging market investments are still underrepresented in many portfolios. Far-sighted investors clearly need to take action here.
To meet the challenges over the next few years, we recommend two main courses of action for investors. First, increase investments in emerging market bonds, while simultaneously reducing investments in bonds of developed countries. And second, invest more in commodities, precious metals and real estate.
The entire study, Opportunities Created by the Global Power Shift, Investing in the New Decade, is available as an e-paper on this page. The Vontobel Relationship Manager will be happy to answer any questions.